This is today's Auto Charter Stocks to Watch for Friday, April 20th, 2012. The washout in the broad-based U.S. stock indices on Thursday puts a bearish spin on the overall market, which may carry over to the individual equities. Today's stock to watch is American Express because this equity market has two emerging bearish patterns which may help to drive it lower, especially if the U.S. stock indices follow through to the downside. Now, American Express stock symbol AXP has formed an emerging triangle chart pattern on the 1440-minute chart that has a strong bias to the downside. Since this equity is currently resting on the support line, it looks like it isn't going to take much to drive it lower, thus completing the chart pattern and setting it up for further downside pressure. Sharply lower stock indices are likely to put pressure on this equity market early in the trading session. The overall quality of the chart pattern is rated as slightly above average 6 bars. The initial trend, which measures the strength of the trend prior to the chart pattern's formation, or this area in here, is rated a low 3 bars. The uniformity rating, which looks for the presence of equidistant tops and bottoms, is a strong 7 bars. And the clarity rating measures the market noise during the creation of this chart pattern. As you can see, it looks like a pretty clean pattern, not very many spikes or gaps. Its solid 9-bar rating suggests the absence of both price gaps and price spikes. Now, the triangle chart pattern, according to stock market technical analysis theory, is a non-trending pattern. And that's because as these lines gradually decrease, the resistance line decreases and the support line increases, the market tends to move sideways like it has been doing here for several days. Okay, the gradual narrowing of the support and resistance line compress the price ranges, often leading to a volatile breakout. Traders get a little bit nervous while this market's in a range and anticipate a breakout. And when the market does, they tend to pile on the market in that particular direction. Now, the first downside target will probably be this low here near 56.09. And if additional selling pressure hits the market, then we're likely to retrace 50% of this rally from 51.59 up to 59.10. This makes 55.35, somewhere in here, a potential downside target. Once this market completes, auto chartists will identify a measured target zone. Now, American Express has also formed an emerging ABCD Fibonacci pattern. And this pattern is forecasting a possible break down to this target level, which is identified as point D on the charts. This level comes in at 55.58. You can see that after forming C, 55.58 is this next downside target. If the market does reach this price, then we could see a potential retracement to the upside. But let's see first of all if we can get downside pressure to drive this market into this price during the allotted time period. Now, according to the principles of technical analysis of stock trends, the two potential price targets determined by two different auto chartist analysis techniques have formed a potential price cluster between 1558 and, if you remember from that triangle, a potential move to 1535. This forms a potential cluster for support. If the market breaks as forecast by the triangle chart pattern and the ABCD Fibonacci pattern, then traders could press the stock hard, especially since both analysis techniques agree on the direction and the magnitude of the move. The combination of both of these patterns should give the trader clarity to approach this stock with a clear conviction of impending weakness. And this has been the Auto Chartist Stocks to Watch for Friday, April 20th, 2012.